As a multi-billion-dollar investor through his company Berkshire Hathaway, Warren Buffett is one of the best investors of all time. Aside from being an outstanding investor, Buffett is also a great wit. He loves to share his wisdom with fellow investors. If you want to succeed in the stock market, you should take tips from successful investors. Warren Buffett is a great example. As a recession looms, many people are seeking Buffett's advice on how to invest for the future. But is Warren Buffett's investing advice BS? As a young boy, Warren Buffett sold gum, Coca-Cola, and magazines door-to-door in Omaha, Nebraska. At the age of 10, he visited the New York Stock Exchange and bought his first shares. Graduate of the Wharton School of Business in Philadelphia, Buffett transferred to Nebraska University at the age of 19. After returning to Omaha, he became a stockbroker. He formed partnerships and invested in multiple businesses, generating more than 25% annual investment returns. In 1962, Buffett took over Berkshire Hathaway as his main holding company, investing in businesses such as the Washington Post, ABC, Coca-Cola, and others. He often purchased companies at a price that was significantly less than the book value of their assets in order to purchase them at a time when the market severely undervalued them. According to Bloomberg, Buffett is the seventh richest person in the world with a net worth of nearly $100 billion. He's arguably the greatest investor of all time. A unique feature of Buffett's fortune is that he invested and reinvested his capital into several different businesses before ultimately becoming the owner of Berkshire Hathaway. Throughout his career, Buffett has gained tremendous fame due to his immense success, his integrity, and his willingness to speak publicly. There used to be just a few people attending Berkshire annual shareholder meeting, but today it attracts tens of thousands. Warren Buffett shares his investing advice on the current state of the stock market. It hasn't been an easy year for investors, and many people are worried about a recession coming. It's impossible to predict whether a recession will occur. Nevertheless, stock prices could continue to fall as economic downturns and market slumps often go hand in hand, according to reports. The stock market may not be safe right now, but what does legendary investor Warren Buffett have to say about investing? If stock prices fall now, your portfolio could lose value immediately, which isn't exactly enticing. In the long run, though, the market's performance is far more important than its short-term ups and downs. Historically, it's never crashed or slumped. So is now the right time to invest? According to Buffett, his buying is dictated by a simple rule. Be greedy when others are fearful, and fearful when others are greedy. If you've been waiting for a more affordable opportunity to buy, this may be your chance. Stock prices continue to fall, so now is the time to be greedy. As an example, Amazon is down more than 51% since its peak. The last time it saw this type of slump was in 2008 when it fell by roughly 60% amid recession fears. In short, bad news is an investor's best friend, wrote Buffett. It lets you buy a slice of America's future at a marked-down price. When the market inevitably recovers, it's a great time to stock up on quality stocks at a discount. You would have earned more than 600% returns over the following 3 years if you invested in Amazon in 2008. You can't guarantee that you'll see this type of growth, but stocks from healthy companies are much more likely to rebound after a recession. While investing during a market downturn can be challenging, it's possible to make huge profits if you buy quality stocks and stay invested through the recovery process. Although Warren Buffett is one of the most successful investors of all time, he will not be able to replicate his success by simply following his advice, one writer said in Forbes. Investors should remember Buffett's advice regarding recessions and the opportunities they present. Buffett advised, be fearful when others are greedy, and greedy when others are fearful. As recessions are times of fear, investors should buy shares at bargain bin prices. It's also true, however, that many people lack the time and experience to identify the best investment opportunities. Due to the COVID-19 pandemic in 2020, he held a virtual shareholders meeting and said, in my view, for most people, the best thing to do is owning the S&P 500 index fund. There are huge amounts of money people pay for advice they really don't need. If you bet on America and sustain that position for decades, you do far better than buying treasury securities. Over the past century, the S&P 500 has returned an average of about 10% or just under 6.9% inflation adjusted. Broad index funds have historically doubled investors' money roughly every decade. Keeps it simple and continues to buy them even during downturns. It makes sense why people seek advice from Warren Buffett when they fear an oncoming recession. Buffett has offered wise advice over his long investing career. Even if you don't want to spend a lot of time in the market, Warren Buffett's investment approach can be shared by many investors. By following Buffett's principles, you can become wealthy or increase your net worth sustainability as well. Thank you for watching and see you in the next video.